Good day, ladies and gentlemen. Today I want to talk about boosting your confidence when it comes to entering trades. Okay, so how do you boost your confidence? I want to apologize for the way my voice is sounding. I'm not feeling too well, so please, guys, bear with me. Okay, but I have to do this video for you. All right. One of the ways by which you can boost your confidence when it comes to forex trading is in backtesting your strategy. Okay, so let's say your strategy is very simple. All you want to do is you want to sell the market. Okay, so you are only looking to draw supply zones. All right, you will want to be very good at drawing supply zones and selling. You can also combine it with demand. It all depends on what your strategy is. I know some forex traders that they only sell. Okay, they are only looking for selling opportunities. If there's no selling opportunities, they are not trading. All right, I'm not saying you should be like that. Everybody has their own. Forex is like trading is like a world on its own. So there are different aspects, different types of traders, different strategies, different mentalities, different psychologies. So you just have to choose what works best for you. So I'm just using this as an example that okay, if your strategy is to sell the market, you want to draw supply zones, then one thing that will boost your confidence in that your strategy is for you to backtest as much as possible. So when you backtest and you see that okay, your strategy is actually working, that will give you confidence to now enter trades. Okay, so let's say I want to sell the market, I want to draw supply zones alone. Then let me get my rectangle. So supply zone, as you already know, you have to have a region where sellers entered the market. And right here, I have that region around here. Okay, so I'll extend it into the future. Okay, so you have that. So now this region stands for the region where sellers enter the market. How did I know? You can see that we move downwards from there. Okay, so definitely there are sellers are interested in that region. So that's my supply zone. I'll just wait patiently for price to come back there and show me signs that it wants to go down. Then I can enter a trade, and you can see what happened. Let's see, price traded into that zone, grab liquidity. I've talked about liquidity before, because definitely liquidity will be above that region. All right, people would have placed stop loss there, so you expect price to trade above it a little bit, then start showing you signs of coming down. So when you see that price is now showing signs of coming down, wait for some confirmation. It could be a candle close below the region, and then you enter. Okay, you can see this candle close below the region, this one right here, it's closed below the region. Then you could have entered your trade, and you see what happened. Price moved down. Okay, price moved down. So excuse me, let's see. All right, let me move this one back and then draw a fresh supply zone. So I've made money with that one. I'm drawing a fresh supply zone. That's my strategy. Okay, so I can see that sellers are interested in this region around here. So these zones are like region. It's not a particular line, so you don't expect it to be perfect. Just draw a region around that area, then that becomes your area of value. You wait for price to come back there. Extend this into the future. Okay, excuse me. Oh, take this down a bit. All right, so it took quite some time for price to come back here. Okay. So what happened here is that price took some time to actually come back to that region. And you can't be waiting for days and days and days, can't be waiting for that long for price to come back to your region. So what are you supposed to do in a case like this? What you have to do is you have to check if other supply zones have been created. If your major supply zone is taking time to reach, it means new supply zones have been created. So let's look at this very well. Okay, I can see this is like a supply zone also. And see market move down from here. Okay, market move down from here. So these are like smaller supply zones under. I can draw across this also. Okay, so let's draw across that. Okay, sellers are interested around here also. Okay, hope you can see the way it's working. It can't be perfect, but you need to understand what you're doing. All right, so price traded up to that particular supply zone. Excuse me. Excuse me. Okay, I'm trying to adjust it a bit. All right, it's okay. So we have that. Okay, so you can see price traded up to that zone, didn't go above the zone to take the liquidity, but moved down instead. All right, so how would you have entered? You could have entered somewhere here. Okay, could have entered after this candle, this second red candle. Okay, which kind of confirms you the price wants to move down. I talked about confirmations. You need to have like at least 2 candles in the direction you want to go. You know, that's going to help you avoid entering and then price moves against you. Okay, so if you have up to like 2 candles in your direction, you are good to go. All right, so you have that. If you extend it a bit, you see how price coming to that region. Okay, price came up to that region and still moved down again. So the confidence building comes from the back testing. All right, so you back test. You can see price still came and went into the region, but this time around it just moved sideways. All right, it moved sideways. So your confidence building comes from you back testing your strategy. And excuse me. And you don't, it's not about being right or wrong. You know, I was watching a particular video, you know, and the trader said something which I really liked. He said it's not about being right or wrong, it's about making money. And that's the truth. It's not about being right or wrong. You can't have a perfect strategy, but you need to be able to use that strategy to make money. How do I mean? I mean you using a good risk to reward ratio. I have always said this: if you have a good risk to reward ratio, you can lose more times than you win but still be profitable. You can do the mathematics. A 1 to 3 risk to reward ratio needs you to be correct only 3 times out of 10. So you can make wrong decisions 7 times. Not that your decision is wrong, but you entered according to your rules, but the market just went against you. It happens. That's trading for you. Okay, so you won't always be correct. So a 1:3 risk to reward ratio is such that even if you are wrong 7 times, you just need to be correct 3 times. So your accuracy should be around 30%. And definitely, I believe your strategy should be such that will give you more than 30% accuracy. So you are good to go. All right. If you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thank you.